I see it as a realistic target. Obviously, we don't know what that price will be, but I see it as a realistic target for any number of reasons. Obviously, they've given some good ones, but we can look at like past performance as well. And so we can see where we would be at. There's a handful of on-chain indicators that we can look at. Of course, we get the technical analysis indicators like Fibonacci lines, et cetera. And typically when you sort of look across a spectrum of different indicators, you get somewhere around a 140 to 220 price range. So that seems to be 170, 180 is about right in the middle of that range. And so I would say it seems pretty realistic. Will we get there? We don't know. But certainly based off of historicals, based off technicals and on-chain indicators, it looks like it's very likely.
And there's some interesting things going on right now, too. Mining difficulty is at record highs, but miners are remaining profitable. What does that tell us about the health of the network right now? What do you think?
Yeah, well, it tells us it's extremely healthy. And so what happens is, if you would imagine like gold, if gold hit $10,000 or $20,000 an ounce, more people would go mine gold, but you'd get no more gold out of the ground. What happens with Bitcoin mining is if Bitcoin goes to 1 million or 5 million, more people would mine Bitcoin, but you wouldn't get any more out. And that's what that difficulty is. So it shows the amount of people that are competing for that Bitcoin. But the reason why they're still remaining so profitable is that even there's more people mining it, but less Bitcoin coming out, the difficulty going up, the price of Bitcoin is making new all-time highs. And so as long as the price continues to go up with the difficulty going up, then it continues to stay profitable. Now, for a lot of people that don't maybe understand this, we have the publicly traded miners, the Mara, the Riots, et cetera, and they're profitable and the stocks have done okay. Some of the wind has been sucked out of their sails because of Bitcoin treasury companies. But you can mine a Bitcoin if you were to do like a self-hosted mining platform through a Blockware or something like that. You pay for the cost of hosting plus electricity. You can mine a Bitcoin for about $50,000 or $60,000 today. And so, of course, they're whatever we're 115, 120-ish range. That's pretty good.
Yeah, I think it's a pretty good ROI if I ever heard about it, but we'll see. There's a lot of financial doomsday turmoil coming up on the horizon, according to our next story here. So hang tight, we're going to talk about it because Robert Kiyosaki, author of Rich Dad Poor Dad, is once again sounding the alarm about a looming financial downturn. This time, he's warning that stock market crash indicators are flashing red, and he's doubling down on Bitcoin. For more than 2 decades, his book has circulated globally, translated into over 50 languages and selling millions of copies. His latest warning reinforces his long-standing preference for non-traditional assets. Posting on social media platform X earlier this week, Kiyosaki stated, "Stock market crash indicators warning of massive crash in stocks. Good news for gold, silver, and Bitcoin owners. Bad news for baby boomers with 401ks. Take care." Now, analyzing market behavior, he argued there are unmistakable signals of an impending collapse in equities. He emphasized that those heavily weighted in stock-based retirement accounts, particularly the baby boomers, may face outsized losses if current valuations deteriorate. Pivoting from standard asset allocations, Kiyosaki supports commodities and digital currencies as strategic buffers against macroeconomic dislocation. He describes gold, silver, and Bitcoin as real money, and he regards them as shields against both inflationary erosion and fiat currency depreciation. His recent increases in Bitcoin holdings reflect what he calls a broader strategy to exploit long-term systemic flaws in conventional financial instruments. The famous author predicts a $1 million Bitcoin surge as fiat currencies face mounting collapse. He casts doubt on the sustainability of U.S. fiscal and monetary policy, pointing to unchecked federal spending and central bank intervention. And he argues those policies have undermined the value of the dollar. And he characterizes Bitcoin as the people's money, or in his words, it's an alternative to centralized systems that are prone to failure. Rather than rely on paper-based assets, Kiyosaki is advocating a shift toward hard and decentralized stores of value, and he believes that shift is necessary to prepare for what he calls an unavoidable financial upheaval. Ooh, we're bringing Mark back. Mark, Kiyosaki is warning about a stock market crash. Do you think he's onto something, or is this just the same message that he always delivers?
Well, he's certainly onto something. So we have to kind of dig through the hype and get to the actual data here. So first of all, I love Robert Kiyosaki. I read all his books growing up. He was my mentor from books, and now he's become a good friend. We get a text message back and forth. I've been on the show many times. He's older. He's not as in tune into the weeds as you and I are every day into the news. So take it for what it's worth. However, he wrote a book, a dozen years ago or so called The Prophecy. And he was explaining how there would be this market crash. And some of the indicators, the reasons that he gives for the market crash was that there was a law passed in the 70s, RISA, which basically allows boomers to invest tax deferred. So all of this money went into the 401ks, et cetera, into a tax deferred accounts. But the law states that when they hit retirement age into their 70s, they're forced to pull the money out. And the reason why they're forced to pull the money out is because the government wants the taxes. And so what happens is, as he claimed in the book, is that you had the baby boomers, the largest segment of the population, all passively investing into the stock market, building that up tax deferred, and then they would all be withdrawing around the same time, and there'd be more selling pressure than there is buying pressure behind that. I think as Bitcoiners, we can understand that that actually makes perfect sense. The millennials and the younger generations, they're not as into buying stocks. They're not into the TradFi world. They would rather buy Bitcoin and hard assets. And so you could easily see that the supply demand of buying and selling of stocks is going to be greatly off. And so, of course, that drives prices, number one. Number two, we can look at some other things. So obviously, we have the rise of Bitcoin. It's the best performing asset in history. Over the last 15, 10, 5, 3, and 1 year, it's crushed every other asset. And so it's also pulling boomers' money out of the stock market and into Bitcoin as well. And then we saw Trump just pass an executive order, or put through an executive order, I think it was last week, where he basically wanted to change the way, or the requirements and regulations around how you can invest your 401k. So right now, a 401k is basically locked into typically equities and things like that. You can't buy alternative assets. Alternative assets being real estate, private equity, and of course, Bitcoin and crypto assets. And so Trump put the executive order in, which then even means more money from 401ks that's still locked in there could come out of traditional stocks and into alternative assets. So we can see there's potentially lots and lots of selling pressure against stocks for all of those reasons that he's called out. At the same time, it's rotating into hard assets, as he said. Gold has been on a tear. Bitcoin's on a tear as well. Now, I do want to just caveat this, and I've given the reasons sort of behind what he's saying. As far as like an epic crash, like this 92% crash, we see, Harry Dent Jr., for example, he's been calling for a 92% crash for like 12 years, and it hasn't come. I've been calling for something I call a crash up. A crash up is similar to a crash. The outcome is the same. My purchasing power goes down. However, prices keep going up instead of prices going down. That's what a crash up is. And so I don't expect there's this like, oh my God, Armageddon crash where everything plunges. What I do expect is, again, the selling pressure to continue to be more than the buying pressure. The prices will continue to trend down, especially in not dollar terms as much, but in Bitcoin terms. And so that's what Robert Kiyosaki means. I agree with him on that point.
Yeah, no, I hear that. And he also says that with this impending crash, boomers with 401ks are in some serious trouble. Do you think Bitcoin could realistically be a lifeline for that generation, or are they late to the party?
No, 100% it can be their lifeline. As a matter of fact, they all need to get off that sinking ice cube of a ship, the Titanic that's going down, and get into the Bitcoin lifeboats as fast as they can. It's not too late. It's one of the most common things we as Bitcoiners hear all the time, like, I wish I would have bought it sooner. I feel like I'm too late now. The crazy thing is that we typically buy stocks, Tesla, Apple, Google, based off of how much we think they'll be in the future.
There's a lot, of course, Kiyosaki mentioned this $1 million Bitcoin price target. We've heard it from him.
Yeah.
We've heard it from a lot of people. Do
Sure.
you think predictions like that help Bitcoin by bringing it attention with those big numbers? Or do you think maybe it hurts it by making it sound unrealistic to those that just aren't really informed about it yet?
Yeah, I've been behind some of those big predictions as well. There's been plenty of headlines with my name and my price predictions out there as well. I gave a closing keynote at Bitcoin MENA last year in Abu Dhabi, and I broke down the math of where I think Bitcoin will be in 2030, 2040, and 2050. And if you don't understand the math of how we get to those numbers, it sounds unbelievable. And they run a headline saying, Mark says by 2040 or 2050 it's this price. And it makes me look like a crazy person, to the point that you're making. However, I would say that it's, if you don't understand, I'm like, no, you can't show that number without the math. You have to understand the math. But what I would say is it's certainly helpful, in my opinion, not hurtful. And the reason why is what I said earlier. It seems like the number one thing I hear from people who, what we call no coiners, who don't have Bitcoin yet, is they think they're too late. I wish I would have bought it 10 cents or $10 or $10,000, and I missed it. And so I think it's important for them to understand the potential of, we're certainly going to 1 million, and then we're going to 15 million, and then we're going to 50 million. And so it's not too late to pay whatever 112, 115 for an asset. That'll be $1 million potentially in 5 years. And so I think it's helpful. Without the proper context, it could be alarmist, but I agree with those numbers and those projections.
Yeah, I mean, I do too. The math kind of speaks for itself. What do you think, though, causes people, the uninitiated, to say that they're too late? Because as we talked about earlier in the show today before we had you on, if I could have told you, hey, I think this asset is going to go 10x in the next 10 years, and I was saying it was a stock to a traditional financial advisor, they'd be like, yeah, let's put it all in that. That makes a lot of sense. And you don't need to buy a whole Bitcoin. So what do you think is the issue here for the uneducated about Bitcoin? Is it a unit bias problem? Like, what is it? Is it just we need to do a better job of educating? And you're somebody who's on the bleeding edge of that space of educating people about finances, about Bitcoin. What do you think needs to happen for people to wrap their heads around what's really going on in front of them right now?
The key thing for people to understand, to wrap their head around where Bitcoin is going and stop looking in the rear view, is to think forward, like they would with most traditional assets. And I think there's three different things that I think hold people back from this. So number one, they see the enormous gains that people got in the past and they hear about those things. And so unfortunately for a lot of people, they live with this victim mentality, like, oh, I missed out, woe is me, and I can't win. And so I think that's like a victim mentality rather than going, wait a minute, well, what is this? And why did it go up so much? And where will it go into the future? So instead of taking control, they just think, I never have the luck, I missed it. Now we saw the same thing happen through other technological revolution cycles. So the last 50-year cycle started in 1971. And we saw companies like Intel that make microchips, Microsoft. We saw Apple computers go up 50,000 to 1,000,000% in the first phase. And then investors thought, oh my gosh, I missed it. I wish I would have got in. I never make it. And then they went up another 20, 50 million% after that. And so this is unfortunately normal behavior in these technological revolution cycles because people don't understand what's going on. And so that's number one. What I'd say number two is I believe it's also somewhat of an attack by the crypto industry overall. And so really, if you look at now I believe on CoinMarketCap, there's about 16 million cryptocurrencies that are competing against Bitcoin. And in order to compete against Bitcoin, I have to be more decentralized, or I have to be faster, or I have to be cheaper, or I have to be the next Bitcoin. And so people have been hearing this next Bitcoin, you missed the boat, get the next one, you missed the boat, get the next one. You know, we're smaller, we're cheaper. And so I think there's been a lot of that programming where people think, well, let me go find the next hottest thing. So I think that's number two. And then number three, I think there is the unit bias. So as you said, you don't have to buy a full Bitcoin, but a lot of people don't understand that. Actually, surprisingly, very few people understand that. So they look at the price of Bitcoin and go, I can't afford $115,000. Thinking that you have to buy a whole one. But I say it's sort of like a bar of gold. A bar of gold is about 400 ounces of gold. You don't have to buy 400 ounces of gold. You could buy an ounce or a gram or even part gold. And so I think there's that. There's the education around the unit bias. There's the education around where it's going into the future. And it's the person's mindset shift to get off of this victim, I never make it, I can never be lucky mentality, and start to try to understand the education of where it's going.